Welcome to Unpack Your Financial Baggage, where we help you answer one simple question. Will you outlive your money, or will your money outlive you? Here are your hosts, certified financial planner and managing partner of Melone Private Wealth, Lou Melone, and editor of D Business Magazine, RJ King.
And today's topic is the anatomy of investor returns. Give us the shorthand before we jump in, Lou.
Well, I think it begins with a simple question. Why has the average investor continually not only underperformed the indexes, but their own investments?
When you talk about average investors continually underperforming, are there historical precedents or is this a new concept?
Well, it goes actually as far back as you could go back to Tulip Mania in Holland back in the year 1865, when the market price for tulip bulbs, believe it or not, skyrocketed. I think the highest price was for this rare, they call it Semper Augustus, and the price was 30,000 florins. And what that translates to is about 3 times the value of an Amsterdam house at that time. You can then move forward to the Great Recession of 07, 09, or recently would be COVID. All of these have allowed the average investor to underperform, according to Dalbar. And the returns over the prior 30 years, the S&P index did about roughly 11% per year over these 30 years, and the average investor did about 7%. So some real quick definitions are probably needed here. So who's Dalbar? They're the financial community's leading independent expert for evaluating or rating business practices and customer performance since 1976. So the next question we have to define for everyone is, how do they define the average investor? Because we're going to be talking about them a lot. So the average investor refers to really the world of all mutual fund investors. Their actions and financial results are stated to represent a single investor. So what this does, it's allowed Dalbar, the entire universe of mutual fund investors, to be used as a statistical sample, ensuring the highest reliability.
So the information provided is for educational, informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based on certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such. Melone Private Wealth LLC, MPW, is a registered investment advisor. Advisory services are only offered to clients or prospective clients where MPW and its representatives are properly licensed or exempt from licensure. No investment strategy or risk management technique can guarantee returns or eliminate risk in any market environment. All investments include a risk of loss that clients should be prepared to bear. The principal risks of MPW strategies are disclosed in the publicly available Form ADV Part 2A. Generally, among asset classes, stocks are more volatile than bonds or short-term instruments. Government bonds and corporate bonds have more moderate short-term price fluctuations than stocks, but provide lower potential long-term returns. U.S. Treasury bills maintain a stable value if held to maturity, but returns are generally only slightly above the inflation rate. This has been the Unpack Your Financial Baggage podcast. Feel free to share this episode with someone you think it may benefit. You can also follow our show on Apple Podcasts, Spotify, or wherever you're listening right now. To learn more about Melone Private Wealth, visit MalonePrivateWealth.com. The Unpack Your Financial Baggage podcast is produced by Jag and Detroit Podcasts.